So we're going to do quick study 16-3. That's found on page 664. And what we're going to do is we're going to use this information to decrease the company's cash flow from operating activities, to determine the company's cash flow from activities. So you start with the net income, 72,800. All right. So we're going to do the cash flow from operating activities. We're going to have the net income is where they start on that. And the net income was on the accrual basis, and it's 72,800. Now here's the adjustments. To reconcile net income to operating cash flow. Okay. So the first thing we're going to do is let's add back the depreciation. And the depreciation, it's an expense, it's $144. So we're going to add that back. It's $144,000. And the reason we're going to do that is because it's an expense on the accrual basis, right? However, there was no cash because all you did is you estimated how much something wore out. Okay? Then your accounts receivable. Now let's take a look. I'm going to put AR for accounts receivable. So your accounts receivable, I'm going to get a straight edge here. So your accounts receivable, let's take a look back here. In 2010, it was $128,000, and it dropped to $100,000 in 2011. Now what this means is you collected some of the accounts, you collected an amount equal to all of your sales plus 28,000 from last year. So it's the year where you collected. So what you need to do now is you need to increase the net income by 28,000 because from a cash basis, it's when you receive the cash that it makes the net income, right? So this decrease here, okay? Now, let's take a look at inventory. Now, inventory went from $216,400 in 2010 to $240,000 in 2011, so it increased. So when it increases, you deduct that. So here we have inventory increase. Now, by the way, up here was your accounts receivable decrease. So the increase, you deduct 23,600. Okay? And what it means from a cash standpoint, you understated your cost of goods sold. Okay? Now, let's take a look at some of the rest of these. Here's accounts payable. Now, accounts payable last year was $102,800. It increased to $121,600. That means that you have not paid for some of those expenses because accounts payable, what it is you incurred an expense, made it an accounts payable. So you have not paid for that. Now the difference comes out to be $18,800. That's the amount of the increase. And it will increase your cash flow because you have not paid for that. Okay? And then, let's take a look at another. Down here you have income taxes payable. Now, last year it was $8,800 and it dropped to $8,200. Well, that means you paid off some of last year's. So that $600 will be cash out, and that will be income taxes payable. Now, plus this this, minus this, plus this, minus that. There was an increase of cash of 166,600, okay? So this is your net income. Here's the cash you took in. So operations, you add this to this, so operations supplied 239,400 in cash. So the net cash provided from operating activities okay. Now I'm going to put up the printed copy. See what questions there are. We'll have a bit of a summary. And then we'll do some more practice here. So, are there any questions? So to summarize, what we did now is there's three parts to the statement of cash flows. Cash flow from operating activities, that's the first part. Cash flow from investing activities, cash flow from financing activities. We only dealt with the top third, that top part. And we dealt with the accrual basis, we dealt with the indirect method. And what we did is we started out with the net income, which is on the accrual basis, and we converted it to the cash basis. So that's what we did here. Does that make sense? Now, let me do this. Let me put up these as guidelines for you. And then let's go ahead. I'll put those up in a minute, actually. And then what do you guys do? Let me get the, here it is. What do you guys do? Quick Study 16.6. And you find that on page 665. Okay. Here's how it reads. So what it says is 16.6, that's 16.5. Here's 16.6. So what it says is, it has 3 years here, all right. So for each of the following separate cases, compute the cash flows from operating activities. The list includes the balance and the sheet accounts related. Okay, so let's take A. So what A says is, here's the net income. What do you do with, now next is depreciation expense. What do you do with that? Next is accounts receivable. It increased. What do you do with that? Inventory. Inventory decreased. Accounts payable increased. Accrued liabilities decreased. Okay? So how do you figure the net cash flow? So let me, first of all, does anybody, who doesn't have access to a book? Anybody? All right, I'll go ahead and take this down. Let me put these up here for your reference. And then, why don't you guys, and maybe we'll ask any questions on that? All right, let's do exercise 16.4. And you find that on page 64 is on page 669. Here's how it reads. Okay, here's 16.4. All right. So here's 16.4. Now, the Rodney Company's calendar year for 2011. The income states the following. So here they give you the net income, right? Okay. Then there's depreciation expense. Now, amortization works in the same way as depreciation for the same reason. Okay. There's a gain on a sale, all right? There's a gain on the sale of a current asset, okay? So there's a gain on the sale of plant assets for $7,000. So don't forget, you're going to cancel out depreciation, you're going to cancel out the gain on the sale of the asset, okay? And it's because they're non-cash. There are items in the income statement that don't affect the cash flow, all right? Then, they talk about current assets and current liabilities. They tell you accounts receivable decrease, merchandise and inventory increase. And of course, here's the pattern they follow, okay? So you adjust for them. Okay, use the indirect method. So is everybody okay with that? So I'm going to go ahead and take this down, because everybody has access to a book. Let me put this up, so if you guys want something to refer to. I'll put up the answers in a minute. As we're saying, we really should use the direct method, because it's a better way to do it. It's just that nobody's going to make a change. Okay. No, Julie, not in this class, just because you'll never see it. Now, the reason it was included is because, you know, it's easier to understand. Okay.